Hi, good morning, good afternoon, good evening, everyone. Based on the time zone you're joining in. Welcome to the webinar Accelerate Digital, 12 Trends that are Reshaping Banking in 2019 and Beyond. Thank you for joining us. My name is Puneet. I'm responsible for marketing and FinTech engagement at Infosys Finacle. For this webinar today, I'm joined by my colleague, Mr. James Buckley, who is Vice President and Head of Europe Business for Infosys Finacle. Also by Mr. Rajashekara Maiya, who is Head of Business Consulting and Product Strategy at Infosys Finacle. During the course of this webinar, you can engage with us through the chat window by asking questions, as well as on Twitter by using the hashtag #AccelerateDigital, and please do tag Finacle. This session will be recorded, and you will have access to the recording as well as to the report basis which this webinar has been put together, available to you tomorrow. So let me get started with the purpose of this webinar. At Infosys Finacle, we have a great opportunity to learn, experience, and shape the evolution of our industry by helping our clients in over 100 countries. With the Trends report, a webinar, and forecast each year, our endeavor is to share our learning, and so that we can help you accelerate your own digital transformation. We believe today our industry is evolving at an unprecedented rate, and in 2019, the pace of change is likely to accelerate. We believe in this rapidly changing environment, winners will be those that are very agile and those are able to anticipate and respond to change. Banks who are innovative enough to create and deliver new customer value, and banks who are competent and ready enough to take advantage of fresh possibilities which emerge as part of digital transformation. We hope this webinar and the report which you're going to have access to will help you sharpen your digital vision, discover new sources of value, and leaves you with ideas that can help you accelerate your digital transformation. For this year, we have created a trends forecast by having 6 trends which are categorized under the business and strategy trends, and 6 in the technology area. And without further ado, let me get started with the first trend. And this is the trends about forward march towards the platform business model. In our trends forecast over the years, we have tried to cover several trends which are shaping industry. Over the last 2 years, we sharpened our focus towards the business model transformation from pipeline business to platform business model. In 2019, we believe this trend will accelerate further. Before going into the forecast, let me take a minute to establish a common understanding of platform business model. For the sake of simplicity, let's break down the value chain of banking in 3 simple layers. The first being financial product and services manufacturing, wherein a bank actually develops a product. The second being matchmaking, wherein a bank identifies the most suitable product or a service to the customer's unique requirements. And the third, the distribution, wherein a financial institution take the selected product or services orchestrated for a customer to a customer's chosen channel and device of consumption. Traditionally, banks have owned all the 3 spaces, wherein they manufactured their own product, found those right matches with their customers, and helped them consume those services at their own channels. But in 2019, we believe there is a significant evolution happening in all 3 layers. This vertically integrated business model is getting fragmented and giving ways to multiple new business model and platforms. For instance, we believe apart from selling products and services which are created by banks themselves, banks will increasingly focus on selling non-financial lifestyle products such as hotel bookings, flight bookings, cab bookings, event bookings, movie ticketing, and several others. They would also focus on creating joint offerings with other partners who will come from both banking and non-banking industries. And more importantly, we are beginning to see our clients taking a full platform approach by selling even third-party competing products, such as a higher paying deposit or a unique payment service from a competition. Similarly, the second layer of matchmaking, the focus is moving towards being a marketplace, which will sell not only the self-created product, but also the products and services created by several other ecosystem partners. On the channels or the delivery side, we see banks bringing third-party channels on par with their own. So in addition to distributing their products and services via their own network of branches, agents, kiosks, variables, which the channels which they own and which continue to multiply, they'll put a lot of focus on selling these products through APIs, which will allow third-party apps and third-party providers to sell these banking products. Overall, we see banks who are already in this journey accelerating their journey. The banks who are who are setting up their vision will sharpen the vision and go out with their first set of initiatives. Overall, there will be two-speed approach. Countries that have mandated open banking will progress faster than the traditional on the transition from pipeline to platform business model, whereas the countries who do not have such regulation will see a steady and relatively slow shift towards the platform models. In this entire game, banks will move to the existing businesses. For instance, one of our clients plans to popularize the taxi service in its country. It's doing it to actually combat another offering by another competing taxi service, which is actually coming out with banking products and services for the drivers and the client ecosystems. This kind of environment will further develop because the likes of Alibaba, WeChat, Google, Amazon, Apple, who have already got some form of financial services in various countries, will continue to expand further. But the good news is, in past, the examples of successful platform businesses typically came from outside the banking industry by this digital natives. In 2019, we believe the platform approaches of players like DBS or Ping An will evolve further and will have very successful examples within the industry itself. And considering the consolidation happening in the industry, we believe the industry will accelerate towards the platform model this year. With that, let me move on to the next trend, which is about reimagining customer journeys for better engagement and experience. Once again, customer experience is not a newcomer in the trends forecast, and clearly banks recognize the importance of it. Therefore, the progressive banks are not just tinkering the customer experiencing, but taking a holistic approach to reimagine them using the modern technologies. In particular, there are three forces which we believe are leading to this reimagination. The first is clearly the evolution and adoption of digital technologies. The confluence of several modern technologies such as AI, mobile, open APIs, augmented and virtual reality will dramatically help banks improve the customer experience in 2019. The second big trend we see is advancing the customer journeys to the point of primary intent. That is, when the customer begins to act on the primary needs that lead to a financial need. This means the mortgage journey will not start when customer comes looking for a loan to a bank, but when he starts actually considering to buy a house or upgrading a house. It's the same thing which you tend to see in the business banking and corporate banking space, wherein a lot of banks are actually embedding their banking services in the ERP solutions so that they can help their customers better manage their businesses and let the banking consumption happen as part of their business management. Thirdly, we believe the customer service touchpoints will multiply. Thanks to digitization and open banking, we'll have many new bank-owned channels as well as third-party channels coming into the reality. And interactions will slowly and steadily actually move away from banking-owned channels to a lot of third-party channels. So it will be important for banks to think of those starting points as well while reimagining this journey. We believe in such a dynamic environment, banks who put in a focus on building a strong omni-channel digital engagement hubs which power all these cell-phone and third-party interfaces will benefit, rather than ones who take the siloed approach of fixing one channel at a time. With that, let's move on to a short poll which will allow us to see how has been your experience on reimagining customer journeys. On your screen, we have the question as well as on the right-hand side. The second last option would allow you to vote. Please help us understand which one do you see as the biggest roadblock in your experience of reimagining customer journeys at your institution? Is it the functional silos? Is it the not able to scale up customer journey reimagination initiatives? Or it's the lack of common vision? Or the KPIs are not helping? Or is it essentially the lack of adoption and expertise on digital technologies? I will allow you to vote, and by the time we'll cover the next trend, and we'll come back to this trend once we take the next poll break.
Okay, it's James Buckley here. I'm going to talk about the next trend that we have in our report, which is open banking, where the world has got to in terms of open banking and what it represents, both from an opportunity and a risk point of view. So open banking in various manifestations has been around for some time. In some geographies like India, actually, there's been a form of payment capability and access to customer accounts for some time. And in that market, for example, we can see the results of the trend towards really a manufacturing and distribution players. And I think Puneet mentioned earlier one of the players, Paytm, which is very much a distribution type operation. It has its own products that it manufactures and distributes financial services products. It also distributes other people's manufactured products through its digital capabilities. And it's also a wider platform player, distributing and all sorts of non-financial products and services as a marketplace. That type of animal we expect to emerge right across the globe, and especially where open banking initiatives are more advanced. And similarly, we expect certain financial services organizations to very much concentrate on manufacturing capabilities to get economy of scale. So the world of open banking provides a lot of opportunity, but for those banks that are in the mode of following, it also provides risks because in areas like Europe, for example, where we have a legislative mandate that came in last year around PSD2 for the laggards, so to speak, the banks that are going to passively open up their customers in terms of access to account and payment instruction as mandated. They may well be engineered by the leaders in terms of new products and services, and especially innovative services that aggregate the information that can be collected around customers and their accounts to provide superior services. And that could hollow out the banks. They could become disintermediated, still having to process and manufacture and run full service products and services, but not really participating in the higher value services that customers will be provided. So that opens up more competition and more fluidity in the market as open banking matures. One of the so I suppose one of the barriers to open banking, whether it's in Europe or elsewhere, in places like Canada or Australia, is actually the plethora of API standards that are emerging. There is no open banking standard to speak of. There are groups that have coalesced, financial services groups such as here in Europe, Open Berlin Group, CMA9, that are trying to define standards amongst the member banks. But in general, there's a plethora of API definitions out there in the marketplace, and that acts to an extent as a barrier to take up, and also an opportunity. So we're seeing very specific companies emerging that will act as brokers effectively. So brokers both in terms of the technology of translation between API sets to enable access from a business point of view, but also from the point of view of acting as legal processors, TPPs as they're called here in Europe, transaction processing parties, which actually is a regulated type of party that intermediates between different financial services organizations. So we're seeing a maturing market across the world, whether there's legislation or not, and whether there are open banking initiatives at a national scale or not. So, for example, in the US, where there is no national open banking or PSD2 type legislation, there are still moves in the major banks either to publish APIs, Citibank, for example, publishing an API definition set of 49 APIs to provide FinTechs with access to their capabilities. And we're seeing PSD2 type open banking emerging in players where they have bilateral banking relationships. People like PNC in the United States recently working on APIs and open banking, even though the actual market isn't systemically there in terms of open banking. So open banking, we think, will change the way banks operate. It's going to speed up digitization quite dramatically, and digitization together with open banking predicates adjustments in target operating models, especially around measurements of value and of success. So whether it's digitization and move towards net promoter scores or a whole series of allied value measurements, we fully foresee the actual nature of the financial institution changing in terms of the way it's measured and the way it competes. That will be a significant shift and dynamic in the marketplace over the next 2 to 4 years. If we look at the next trend, in addition to open banking, we can move forward. Obviously, exposing oneself in terms of the customer base and their financial positions necessarily lends oneself to potential for cyber attack. But it's just one of a number of ways that cyber attacks and security needs to be invested in. So we're seeing an ever-increasing trend in terms of cyber attacks that have been invested in terms of counter moves by financial services organizations over the last 2 to 3 years, and we see that trend continuing. Vulnerability in terms of open banking and in general banking trends lends itself to the need for a lot more security, whether it's by authentication and multiple tokenization of identity, or whether it's actually much more specific investment around preventative analysis, artificial intelligence and deep learning to try and thwart systemic attacks. Both sides of the house, the banks and financial services organizations and the attackers themselves, are using ever more sophisticated software and technology to play the game. And we foresee that cyber attacks and the flip side of defense will use some of the same sort of techniques, and they're already doing that in terms of artificial intelligence algorithms and essentially learning mechanisms to expose vulnerabilities. So a big investment around cyber defense, and a big investment from the hackers around artificially intelligent driven attacks. So we foresee that as being a major area in the next 12 to 24 months, increasing investment in security tools. Okay. And I think we've got to the next, just move one forward. And then we've got to the next audience poll. Over to you, Puneet.
Perfect. So we have that next poll live now, which is essentially about which of the following is the most important for your digital ecosystem strategy in 2019? Will you start offering non-financial products to your clients? Will you start selling competing third-party products through your channels? Would you start distributing your products and services to third-party channels? Or would you focus on augmenting your revenue mix with new data and insight sharing revenue models? As we go through this poll, let's have a look at the results from the last poll, where we talked about which is the biggest roadblock in terms of successful reimagination of customer journeys. And we have a tie for the top slot. And the tie is between the functional silos and the limited adoption of, as well as expertise on digital technologies. And it's not a surprise, this afternoon we had another webinar, and we had a similar result. The highest was the functional silos, which is which essentially reflects the cultural challenges we have in our organizations, wherein we are still divided by functional silos and not able to take an enterprise view or a customer-centric view. And the second being the lack of digital expertise. By the time the voting is going on, let me also ask two questions which have come on from the audience. James, the first question is, when do you think full impact of PSD2 will be visible? And who will be the winner, traditional banks or the new digital startups?
Yeah, I mean, we're actively working with open banking and PSD2 solutions in some of the tier one banks here in Europe at the moment. The real manifestation, I believe, will really comes in towards the end of this year and into 2020, when really the banks will have already had to have opened up their API sets from a legislative point of view, and there's enough time for solutions that are being launched to start to affect change systemically in the marketplace. So, for example, most people look at the retail space as the sort of major area of open banking, but actually we see a lot of traction and a lot of thinking going into the SME and Mittelstand and corporate banking space with regard to open banking, and we expect that there will be some significant winners over the next 18 months, whereby they can offer quite dramatically superior liquidity and cash management capabilities, marrying up open banking with the change to real-time payments, and therefore marrying up a change to near real-time liquidity service offerings, which will change the marketplace in the context of the corporates that the banks are supplying. So those banks that haven't invested will almost certainly start to see quite a dramatic shift away from their capabilities, and the banks that have invested will start to mop up significant amounts of business through superior services that they can provide via PSD2 and open banking. So I think that as things will start to accelerate within the next probably 14 to 18 months.
Thanks, James. And there's one more question pending from the audience. We're going to come back to when we go to the next poll. For now, let me pass on to the baton to Maiya.
Thanks, Puneet. Thanks, James. We are on the fifth trend under the business and strategic trends for 2019. And it's one of the important trends when it comes to in terms of affecting the banking industry, and not just the banking industry. Every industry is going to face a similar challenge when it comes to in terms of workforce and culture. I think, as you're aware, more than 50% of the global population is less than 30 years of age, and this population is the most educated and most opinionated lot of entire human history that we have seen so far. And that has its own implications and impact on the banking industry. And if you now look at, as per a prediction, almost more than 36% of the global workforce is going to be led by the millennials by 2020. And this 2020 may be even earlier as we see. So from the perspective of expectation in 2019, as Puneet and James talked about, things are moving into digital, things are moving into platformification and the APIs and open banking. I think as and more things move towards digital, there is a serious threat of those digital things also getting into issues around and challenges around the security and in terms of the data breaches and things like that. So what we see in 2019, there is a whole set of new skill sets that are required from the talent expectation perspective in the banking industry. So as we speak, as we prepared this trend report this month, we found out that almost $1.6 trillion has been lost by the organizations by the end of 2018, and that is not the end of it. It is going to expected to go up to almost $6 trillion by 2021. And this is because there is a lot of growing digitization and customer data protection is becoming, are getting a sharper focus. So hence in 2019, we feel that there is a significant investment is going to be done by the banks in looking at hiring, training, reskilling the existing talent around digital and cyber security and cyber safety. The next and the most important element is, like James touched upon, the artificial intelligence and usage of machine learning and the natural language processing. The AI as a space is evolving over a period of time. In the last 3-4 years, we have seen significant impact of that on the banking industry, whether in the area of automation, in the area of fraud detection and fraud prevention. But unfortunately, this area has very, very limited talent who knows and who understands not just the technology like AI umbrella, but in terms of how to apply that in the context of a banking and make sure that it is simplified and as well as works in context of what's happening in the area of either fraud prevention or in the area of automation or in the area of understanding customer behavior and patterns. The third and the most important, the workforce expectation from a technology impact perspective is automation. And we have been seeing that in last 2 years, there's an extensive automation is taking place in the banking area where routine and repetitive transactions are getting automated on a continuous basis. And banks are now looking out for more and more such transactions coming to an automation area. But unfortunately, in banking, we have too many banking careers and very less career bankers. What does it mean? We don't have people who understand the depth of the process and why the process and what the process and how the process part of it. So for a bank to automate something, they need to understand the logic, the context, the background, the history of such processes so that they're able to appreciate why that process is behaving like that before it actually going and automating it. Automation for the sake of automation is not going to help. Hence, it's very, very important for the banks to look at and learn from what has happened in the other industries in 1990s. Industries like automotive industry, it really went through that kind of a process, especially when things started from a lean manufacturing or a just-in-time kind of a production in Japan with the Honda and Toyota kind of companies leading it. So it is very important for banks to look at in terms of how to make sure that hire the right domain depth people or retain the right domain depth people in the organization to actually automate the transactions and the right transactions at the right time. There are a couple of challenges that we foresee in 2019 while banks are trying to do that. One of the most important challenges that we're seeing is a big gap between the academia and as well as in terms of the industry expectation. The university talent that is available, which is just passing out of the university with either a technical degree or with respect to a functional degree, there is a huge gap in terms of the talent demand that is expected in the area of in the banking. So there is a need to bridge this gap, and organizations have to start involving themselves in the earlier stages of the university education so that they are part and parcel of the curriculum and they are enabling such people, they are empowering the students so that when they come out of the colleges or the campuses, they're able to know, understand and appreciate, and they become more productive in a very short span of time than trying to spend time once you onboard them. And this is one of the important trends that we are seeing as part of when it comes to in terms of a challenge between the gap and as well as in terms of the expectation from the industry. What we've also seen is, for the first time in the history, there will be a cusp of a millennium or Generation Z serving the Generation Z as a customer, and Generation Z serving the generation either as the baby boomers or the seniors as the customers. So this expectation mismatch and as well as in terms of the wavelength mismatch is going to hurt the industry when it comes to some banking services, because what we have seen is, as per a recent research, almost the 73 million people, millennials, going to hit by the age of 2019, and they are going to outnumber the baby boomers for the first time in the history in the employment scale. So this is expecting people to now look at in terms of how to make sure that they are trained to serve both the millennials and as well as the senior citizens, and expect the cultural mismatches and the diversity that is going to be served. Coming back to in terms of the cultural change that we see in the workforce is one of the important things that banking industry has to adopt in this area, is to look at in terms of how they can now make use of the trend that is taking place in rest of the industries. Simple things like a part-time employment, a short-term employment, where people are just working in other industries like in information technology or in high tech or in other industries. So this is very, very important for them to appreciate and as well as adapt on this kind of an environment so that they are ready to hire the best talent, but not on a permanent role or on a payroll basis, but leverage their expertise and experience when it is required. And this is going to be a game-changing kind of a situation for banks. So they have to change their processes, their practices, their manuals, and how quick you can onboard them, how quick you can leverage their expertise and experiences, and how quick you can release them. And this is going to be a very, very a big demand going forward in 2019. And one of the underlying principles across all these things that we talked about, we feel that banks have to invest heavily in a continuous learning program. And learning and learnability is going to be the key, and that is going to differentiate between the winners and the losers in the banking industry when it comes to the digital and the human interplay as a trend. Moving forward, the last trend in the area of the strategic and the business trend, what we are seeing is there is a conflict that comes across between in terms of an area where a lot of ethics is expected and an area where you have responsibilities and the data privacy is to be adhered to. So we are expecting almost 33% of the revenue shift is going to take place from the banking organizations to the organizations like FinTechs or Big Techs or RegTechs, whatever the name that you're calling for. So this shift is going to be taking place in a much more seamless manner. But unfortunately, year 2018 saw two major acts coming into picture from a legal perspective. One is the GDPR, which is trying to protect the data and the usage of data and the consent expectations from the customer for the usage of that. And at the same time, in the European context, you had the Payment Service Directive 2, which is PSD2 as popularly known as, and that is expecting banks to expose APIs and provide some data to the context of a TPP or an AISP or a PISP. So two regulations emerging side by side, but having some amount of conflict against each other. And this is the kind of situation where banks have to really work on. But at the same time, what we see in 2019, there will be a huge opportunity for banks to look at new responsibilities and as well as in terms of an evolving revenue models that they should be able to monetize on and create a commercial construct around it. And of course, in the era where most of the banks are struggling for their net interest margins and as well as struggling to maintain the return on equity kind of a situation, I think this data privacy and ethics comes in handy for them to now look at developing new business models, which was not existing in the previous years as a bank. They should be able to now monetize this. One of the important things is how to monetize the data with the permissions and as well as within the permitted boundaries of the legal environment. And how do you now make sure that those data is leveraged in an API-led environment so that you have a lot of revenue models that is going to give you perspective to make sure that a commercial construct is emerging. And at the same time, what we're also seeing is there will be a more and more attacks, there will be a more and more data leakages, and there will be more and more confidentiality information leaked out, and we have been witnessing this for several years now, and banking industry is no exception to that. So in that kind of an environment, banks have to now start planning, budgeting, and keeping an insurance aside to make sure that they have a lot of customer connect so that they don't lose out on the customer experiences. The second and most important thing is they should be able to now build a comprehensive and enhanced security and encryption technologies being used so that they don't unnecessarily lose the data. And more importantly, as more and more central governments and the central banks are going to come out with data protection acts, the bank's approach should be to make sure that they design their systems from a data protection by design angle, so that you don't have to think data protection as an afterthought after the design and after the systems is put in place. But by nature, you have to think around data protection is inside the design paradigm. And at the same time, one of the boon for the banks in this area is to leverage and look at blockchain as one of the important technology where it provides not just the transparency, but it is also going to provide them the security, safety, and as well as immutability, so that you don't lose out on the data and you are not on the wrong side of the regulators because of such kind of data loss or privacy loss. And this is what we are looking at as an important trend, that is the sixth trend under the business and strategic trends. So what we'll do is now we will go forward and cover the next set of technology trends. And one of the important area to understand from the perspective of technology trend is when more and more banks are looking at digital, more and more financial institutions are going for a comprehensive digital transformation. And we've been interacting with many banks globally in the last 2-3 years, and every board has an agenda of digital. And of course, the definition and the scope of digital varies from bank to bank. But what we are seeing is in 2019 and onwards, it's very important for bank to decide a comprehensive digital reference architecture in their bank for them to now take on what is going to be coming under the digital transformation. And this requires them to now look at more and more business-focused architecture. I think in all the previous technology revolutions that have taken place in the industry, whether it is around mobile, analytics, cloud, or even for that matter, an online internet coming into picture, I think the approach was largely to look at technology as a leader, and business is just trying to leverage that technology. But when we are looking at digital as a transformative agenda for the bank, it is very important to now put the business in front, and business should drive the reference architecture for digital. And this is where I go back to connect my previous point in terms of how do you make sure that you retain the domain, you understand the depth of the domain and convert that domain depth and strength into defining a comprehensive digital transformation. The second and the most important element when you are trying to define the digital reference architecture is to look at in terms of a comprehensively and truly an agnostic kind of an approach. It should be agnostic to the technology stack that the bank is trying to use. It should be agnostic to the technology architecture or application architecture that is trying to use. It should be agnostic to the cloud deployment model that is trying to use. You should be able to work on an open source and open system in a interchangeable way, and make sure that it is agnostic to the customer channels and as well as in terms of the backend systems. So it's very important to leverage what strength the bank has and as well as what legacy they have today, and more importantly to make sure that the digital reference architecture works in tandem and help them in a progressive modernization instead of expecting them to do a rip and replace all branches, all customer data, all channels over a weekend kind of a situation. So the progressive modernization componentized approach expects them to now look at defining a comprehensive digital reference architecture which provides them the agility and as well as required responsiveness for the market changes. And more importantly, as we see in last 2 years, there is a lot more acceptance and awareness in the banking industry around usage of the open source. The fear is slowly going down, and we have seen progressive banks like DBS, which have stated intent of moving towards open source across their technology stack, including the entire deployment moving from an on-premise to a cloud kind of a situation. So they've already started their journey, and they have stated their comprehensive closure and logical closure of this journey in next 2 to 3 years. So this is what is expected from most of the banking organizations which are struggling with the legacy to make sure that they move towards an open source adoption. And the open source as nature is now supported by the community and the security expectations and the safety expectations, and in terms of the entire after sales support, all of that has been taken by the community. So banks should be now be able to have a lot more confidence. In fact, we have seen more and more governments are moving towards open sources. A classic example is in Indian context where the entire market infrastructure of India, whether it's a unique identity like Aadhaar, whether it is an UPI system like Unified Payment Interface System provided by NPCI, all of them have comprehensively moved towards open source technology. So when the governments are moving towards that, I think banks should be able to adapt to that in a much more easier way. The next and the most important reference architecture expectation that we are seeing as a principle is to have an automation by design. So automation should help them in terms of automating not just the operations, which is front, mid, and back office, and helping the customers, but the automation should be able to help the partner ecosystem when it comes to integration, the FinTech system when it comes to leverage the APIs in a seamless way, or in terms of regulators when they want to now leverage this to understand what's happening in a bank. And automation is looking at self-healing capabilities, self-correcting capabilities, self-protecting capabilities, and self-preventing capabilities without a manual intervention. So whatever that previously we talked about, the data privacy, the usage of artificial intelligence, or even for that matter, if you want to prevent anything from a cyber security attack, the system should be, and the reference architecture should be such that it is self-driven. So that is where we are looking at automation by design. And of course, an end-to-end usage of an embedded analytics in an online real-time basis in the whole stack. It is not just to monitor your operations, but to make sure that you understand the customer better, your business better, your transactions better, your branch performance better, your staff training expectations better, and based on that, adapt to the learnability quotient. So these are all the things that we are looking at more and more coming into picture when it comes to the first technology trend that we are seeing, how to develop a comprehensive reference digital architecture in that journey. Moving on, the second trend. Before that, I would like to now highlight an audience poll. Over to you, Puneet.
Thanks, Maiya. I think before we go into the blockchain trend, we thought we'll do a pre-survey and understand where do this audience believe the focus of blockchain investment would lie. And the poll is live now. You can choose any of the 5 very popular options where institutions are prioritizing blockchain investments. And we also have results of the previous poll in which we asked about where you're going to focus on digital ecosystem strategy. Not very surprisingly, the highest response has come for we will start actively, actually very surprisingly, we sell competing third-party products on our channels. Frankly speaking, we have done this survey in past as well. This is the first time we have got this response. Most often the response is we're going to actively distribute our product and services on third-party channels. So I think we have a very unique experiences playing out within the organization. It's very thrilling as a consumer, at the same time very interesting to see how industry will evolve when we generally move towards a marketplace approach. As you fill in with your surveys, I have a question. Maiya, I would like you to take that, which says, please share examples of banks that have successful platform business models.
Thanks, Puneet. We have seen many banks, just to give 1 or 2 examples considering the time constraint that we have. DBS Bank from Singapore is one of the leading provider of platform business, and in fact, they have started providing a marketplace for the used car selling in that market. As you're aware, in Singapore, it's easier to buy a car, and it's very difficult to get a number plate or license plate for that because the Singapore government releases these number plates very selectively. And this bank has leveraged the situation. They have started this marketplace for second-hand and used cars, and as well as providing financing option, bringing the buyer and the seller together, and making sure that you have an important platform, an aggregator business for that. The second example that I want to highlight here is in terms of the bank from India called ICICI Bank, which is the leading second largest bank in Indian context, and they have come out with an India Trade Connect extension of that blockchain solution provided by Infosys into a corporate connect. When they announced this corporate connect, they had almost onboarded more than 250 corporates onto it. And this is basically trying to bring in the vendors, the suppliers, the sellers, buyers, all of them together, link them to a network like blockchain, and provide digitization capabilities from invoicing going up to the procurement and the entire supply chain being managed on the blockchain, and including your invoices, the warehouse receipts, and your goods tracking, and the logistic company being onboarded, and the insurance company being onboarded to secure the transaction end-to-end, plus financing of transaction through ICICI Bank is the another thing, and the entire thing is happening through blockchain, and the blockchain has provided them the capability of converting this into a platform and bring the like-minded corporates to execute their business completely in a transparent way, in a immutable way, and make sure that this whole transaction is traceable, secure, and as well as safe. I'll stop here.
Thanks, Maiya. With that, we move on to the next trend. James, over to you.
Yeah, so I'll try and be brief because I know we've got not so much time left. So artificial intelligence is the next trend that we see, and obviously the AI has been around in various forms for some time, but we're seeing an acceleration of artificial tools, both in terms of providing customer experience, whether they're artificial intelligence interfaces, chatbots, a la people like Bank of America, and here in Europe, Swedbank, providing essentially intelligent agents, or whether it's artificial intelligence that actually underpins the customer experience to provide digital containment, in addition to sort of the obvious interaction points such as chatbots, the less obvious analytic behaviors that actually analyze propensity to complain, propensity to drop out of the self-service digital experience, and learn to find proactive ways to maintain the consumer's appetite for staying in the digital world. Artificial intelligence is wrapping at different layers, and what we're seeing is a move from actually other industries that have used artificial intelligence in a more systemic way. Those sort of tools and techniques being taken up by banking. So we see in a recent poll with EFMA that, for example, 67% of retail banking operations named AI and machine learning as the technologies that have the greatest potential to transform customer experience in the next 12 to 24 months. So we additionally, in terms of artificial intelligence, we see that the impact will be systemic in terms of business processes. So the fragmentation between traditional organization structures, front, mid, back office, will change. The enablement that artificial intelligence can create, so whether it's, for example, onboarding complex corporate customers into a bank where there are multiple different data sources that all could be interrogated by chatbots, and you don't need large numbers of individuals over large periods of time, or whether it's payments that can be simplified from a risk point of view where a large payment needs to go through a traditional front, mid, back office, and we can use artificial intelligence to speed up the services. We see artificial intelligence wrapping around and helping transform those processes in the banks over the next 12-24 months. So those are the sorts of use cases that are starting to gain traction in terms of artificial intelligence. And a third area that we see already in parallel industries, so the Amazonification of banking is another key area that the banks will adopt artificial intelligence for, and that Amazonization is effectively analyzing enough information and creating very individually personalized offerings to individuals and organizations alike. So the idea that artificial intelligence can lead to mass personalization of products and services and interactions to the preference of the consumer is an area that's being heavily invested in at the moment. So those are the sort of major headline trends that we see. We see that also further ahead we might see both in attendant with the idea of open banking and distribution, the change that AI can bring to the types of products that service individuals and organizations alike. So the idea of rather static deposits providing value may shift in favor of a greater portfolio of investment type products and services, as artificial intelligence layers can provide a better customer servicing potential for value. So that is something that will almost certainly come in to banking from the side. Obviously there are already self-service investment platforms with robo-advisors, but the merger of retail, especially in the mass affluent space with investments will start to change the way people bank in terms of the underlying products and accounts that they use to provide value and provide liquidity for payments. And we believe that's probably a 2 to 4 year trend, but artificial intelligence will be one key component in that trend as well. Okay, let me just move on to the next trend. I know we're running out of time. I'll try and be as brief as possible. So the next trend we've touched on already, blockchain. What we're seeing here this year in, sorry, I've clicked it twice, here in the blockchain world, which again sits alongside a lot of the technology trends that are incumbent at the moment, is a maturing of blockchain from what was 2 years ago blue skies thinking and technology futures based obviously on cryptocurrencies to last year the emergence of collaboration and collective groups and use cases to this year actually the maturing of those use cases into business driven propositions. So whether it's payments or whether it's information exchange or whether it's smart contracts in the context of sharing in networks and speeding up both the quality and the speed at which information in networks can be provided, we see that this year is the year where the financial services industry in particular will go from what's effectively R&D to production and scale. And we've seen some of it starting already. We're actually involved in providing a supply chain network across India, which has taken off from being an R&D to an emerging network, a supply chain network with value. And we see that blockchain as a network, in the context of what it is, it really is just an enabler to allow network-type propositions with real-time capabilities to transform business. And in that case, supply chain, we see a big difference between the traditional products and services that the banks can provide downstream from the initial invoice raising and interactions between various counterparties in the supply chain to the point where letters of credit and other types of financial instruments can be provided to upstream provision of value that the banks can now do because they can now see the entire supply chain in the same mode that the other counterparties can as being transformative. We see that not just in supply chain but in payments and other areas. The concept of blockchain providing network capabilities with immediate real-time visibility of what's going on systemically is changing the nature of the way different supply chains, different types of industries operate, and that provides opportunity in terms of financial services value within those mutated networks. So big changes over the next 12 to 24 months, and 2019 will be a pivotal year in which blockchain adoption is taken up. Just one proviso, however, we do actually see hacks on cryptocurrencies. We've seen 5 cryptocurrencies hacked this year through mining hacks, and so obviously there'll be increased investment around blockchain. Next one, cloud as a strategy. This trend is advancing very rapidly. A lot of financial services organizations and others obviously are looking to ship out their capital expenditure into OPEX expenditure, and cloud is effectively the vehicle for that. So huge trend towards really moving the workloads out of the physical estate of banks, out of data centers and in-house estate into private and ultimately public cloud for the benefit of essentially 2 things. One, to change the way investments are made so that banks can focus on what they are, which is effectively organizations that create financial value and manage financial risk, and away from being technology sinks. So other third-party organizations can provide the the backbone, the IT backbone to the banks without the banks having to spend in a capex mode on those types of infrastructures. That will also lend itself to the nature of the way banks actually source services and glue them together. But that type of change towards capability model-driven assembly of infrastructure for businesses is starting to take shape. There's a long way to go, though. So we see private cloud is emerging, public cloud is something that's on the horizon and starting to emerge. People like Santander with Open Bank are moving in that direction as we speak. Okay, I'll hand it over. So the next trend, I think Puneet, were you going to cover this one?
Next two things we are going to cover around the emergence of the technologies that have happened in last 2 years. The first and foremost is in terms of not just the Internet of Things, but in terms of how to make sure that banking is delivered on voice-based the supporters like an Alexa or banking on Google Home, and we are seeing that is going to hit the mainstream. And similarly, we will witness in 2019 more and more banks going in a production environment on no-touch go kind of an applications, which can be wearables, which can be even devices that are embedded in applications embedded in the devices that is owned by the customers. And more importantly, we are seeing that this mainstream application of IoT, not just from a typical retail transaction, but getting into a trade finance transaction and lease transactions also. The last and the most important trend that we are going to witness in 2019 from a technology perspective is there will be a combination of usage from an augmented reality and a virtual reality, making sure that there's a mixed reality coming into picture in the banking. And we see that while the takeoff can be slow, but we see a lot more promising usage of that in 2019 going ahead. And we are already seeing some banks are interested in putting up a pilot, just like what happened for blockchain in 2016 and 2017. And they're trying to now look at in terms of a comprehensive augmented mixed reality experiences being provided to the end users. And at the same time, parallelly, we are also seeing providers like Apple, Microsoft, Google, Samsung, they're all investing very heavily in delivering these mixed realities and with various devices. So that is going to be a combination of technology coming together, banking services to enhance the user experience. And the last one, what we see as part of this trend in 2019 is the banks need to have the right partnerships and right user experience studios being built up to make sure that this changes, because that layer is a more transient and much more adaptable and much more culpable for a faster change. So how to make sure that banks are able to now partner with the right UX design and as well as bring in the right adoption, both internally inside the organization and external to the customers, is going to be the game changer going forward in 2019. So with that, we have come to the end of the 6 technology trends, and we will go ahead and request Puneet to announce the audience poll on this.
All right. Thanks, Maiya. I think with this, we come towards the end of this webinar. The last question we have on the poll is, if there is any topic that you would like to discuss further with us, feel free to share. The webinar platform doesn't allow more than 5 options, so feel free to talk to us on any of the topics we have discussed today. You would, as we said at the start of the webinar, you will have the recording as well as the complete report available to you through email. And we look forward to engaging with you beyond this webinar as well. Thank you once again for joining us. Thank you, Maiya and James, for joining us and sharing insights. All the best, everyone, and wish you a very successful 2019. Thank you.
Thank you.
Thank you.